we're going to go ahead and get started. I have presenter Peter Bentler, who's already here from Wintrust Bank, who's going to speak with you all regarding succession planning. So I will go ahead and allow Peter to share just to introduce himself, and then we can get started on the presentation.
Thanks, Quandra. Hello, everybody. As Quandra said, my name is Peter Bentler. I work at Wintrust Investments. I work primarily in the Beverly area, located on the south side of Chicago. I hope some of you are familiar with that area. But today we're going to be talking about succession planning. And Quandra's going to be nice and help me move through the slides here so I don't have to juggle too many balls. But really excited to do this today and hope we have lots of participation and get lots of questions. Otherwise, this is not so fun. But we're going to essentially go through some stuff here. So if you want to flip to slide 2, Quandra, that would be great. Want to go over kind of the agenda and the ground rules and kind of talk to you guys about a little bit further. Yeah, I think that, I don't know if you're in the right slide, Quandra.
Okay, that's on page 3. We should slide 2 means. Okay. Is there another slide?
I think it's on page 7.
Keep going. Okay.
Yeah.
This one?
Nope, keep going.
Okay.
So yeah, I mean, do we not have the slides for this? Like it says slide 2, we don't have a PowerPoint of it? Is that all we have?
No, I just have the instructor guide.
Gotcha. Okay. So in an effort to try and move this along, I guess you guys can read ahead of me if you want, but we're gonna basically go through this, hopefully get a lot of back and forth and kind of talk things out. Otherwise, this will fly by and we'll be done in no time. But the big thing is, if you guys share about your own experiences, we can learn a lot from each other. You guys can teach each other, and that's always more interesting for everyone involved. Like I said, my name is Peter Bentler. I would love to know any of your expectations, questions, concerns, what you guys are thinking you're going to get from this training today. Can anybody go first?
So I will call on someone. Al, do you mind jumping in there? I unmuted you. Go ahead. Go ahead and speak if you're in a position to. Well, maybe he's not in a position to speak. Let's talk to Terry. Terry, can you tell us what your expectations are?
I have a lot of noise background. Sorry about that. Homeschooling. But I would expect to know if something should happen to me, how can I dispose of my business? Actually get a profit from it. And also just putting key people in place and things in place just to say, what do I want done? Should I not be able to continue with the business?
Gotcha. Good one. I like it.
Anyone else? Well, Miss Jacqueline, you're always online. So I think you're very serious when it comes to making sure your business has everything to be successful. Did you want to share what you would like to get out of this conversation? Okay, well, maybe she's not in a position to talk. What about you, Ms. Hines?
Kind of the same thing as the other participants said, just trying to figure out in the event that something happens, to me, what happens with my business.
Okay, thank you.
Yeah, I think that's good. I think that, we all have homeschooling going on. I have it as well right now. We're on break, which is kind of nice, but I think we're all in the same boat as far as background goes. So I appreciate you guys not clouding up the sound and making it impossible to hear me. So we'll just move forward, and hopefully you guys can participate where you feel a need. But on the next page, Quandra, if you go, the objectives, the idea is to teach you guys the basics of this, right? We're going to go through kind of what you need to do, what you need to be thinking to sell your business and or to transition ownership of your business. Yeah, there you go. I think one more back.
One more, this one, okay.
Or no, the other way.
This one?
Page
right
7.
here?
Yep, there we go.
Okay.
So the idea is that you got to consider who's going to be next for you, and whether whether that's going to be someone that you know as an employee or as a family member. Those are kind of the big ideas that we should be thinking about ahead of time. But you need to actually do all of the things that are required to make that happen, all the legal things that you have to do to get that to happen. But to get to thinking about it ahead of time, you can also look at other ways that you can hedge your bets. So a lot of what we're talking about today is selling the business, but sometimes in a lot of businesses, it's hard to sell that business, especially if the person who is running the business passes away, right? There are people out there known as key men or women, basically the idea being that that person is key to running the business. Usually that's the owner. In a sales business, it might be a salesman, but there are definitely owners that have their hands on every aspect of the business. And so if that person dies, it's going to make it a lot harder for anyone who, your heirs or anyone who would have a financial interest in the business to sell it without you. So if you're not doing these things ahead of time, it's going to basically destroy that value. And if you want to have that value passed on, you got to put the steps in now, and in a lot of ways, even the money now, to make sure that you have a plan in place to pass the business on smoothly. You also, I would say, owe it to your customers, right? You owe it to the people that have been with you, the big believers, the ones who have been loyal. You owe it to those people to make sure that you have a good transition plan and a good, smooth transition. So moving down here, what do you know? I think that, we need to kind of just take a little time to assess where we are and kind of what we know and what we don't, or how you feel at least about it. So if you guys can complete this page for me, that would be great. And I'm going to be quiet for a little bit while you guys do that.
Can everybody read this slide? Okay, thanks.
The next part would be the pretest, right? Testing your knowledge about selling a business. What is it that, what is the reason that you're selling the business? There are a lot of good reasons to sell a business, and there's a few of them listed here, but I think the best one is a new job offer, right? If you can get the business to a place where it can take care of itself, or someone else can step in and run it for you, which is, similar to selling the business, then it allows you to have more free time to do other things. So I think that ready to retire is another real common one. I think that that's a tricky part of this equation, but very good reasons to be thinking about this stuff. Business valuation, here we go. So if you guys can kind of look through these, jot down your answers. We're going to go over them in a second, but I'm pretty sure you can see what the correct answers are. Okay. So the next part here, on page 10, Quandra, if you will. Why sell your business, right? There are lots of reasons. Job offer from another company, purchase offer, dissatisfaction with sales and profits, change in the market or industry. In the world we live in today, things are happening very quickly. And I think that, there are a lot of industries that were once very profitable that have lost some of that profit. I know that I'm going to assume a lot of you, read about Donald Trump's tax returns that came out recently, and that he paid, little to no tax in the last few years. Well, that's a common thing for property developers and or business owners that have real estate property. So, those tax laws could very easily change. And if those tax laws did change, that would dramatically affect the amount of people in that property development space. It would change the entire arena. I don't know if it's ever going to happen. I'm not going to venture that guess, because who can guess what's going to happen with tax law in the future. But it would dramatically change your ability to sell your business. So thinking about this stuff is all well and good, but things do happen that are outside of your control, and you get to a point where maybe the business worked for you for 20, 30 years. You made a good living in it while you're doing it, but you might not be able to sell the business at the end. And that might be something that you have to come to grips with. Some of the business reasons to sell it, I think that, there are probably a lot more than what are listed here, but some of the personal reasons are definitely going to be more than that are listed here, right? I think that retirement, we already touched on. Burnout is something that definitely most people in a lot of different jobs are feeling today. It feels like we're all got kids at home and, definitely doing way too many jobs. But, the desire to go in a new direction, to start a new business, to kind of keep a couple businesses up in the air, kind of keep them both going for a while, and then decide you're going to go with one over the other, that might be a big motivating factor. So now we're going to get to the last little point here. What would be your main reason for selling your business? So can we get some participation here? Does anybody have a reason why they would want to sell your business?
I can call on Al again. Are you available to answer that question?
Disagreement with partners.
I'm sorry, what was that, Al?
Disagreement with partners.
Oh,
Yeah.
disagreement with partners.
Yeah, it's a good one.
Yeah, that's a good one.
That's tricky, man. The disagreement with the partners it's like, it's almost in some ways more intense than a marriage, right? I mean, these are people that you probably see more than your spouses. So it can definitely be an issue. Do we have anybody else out there with a reason that they want to sell?
Retirement.
Retirement, good one. We all want to stop working someday, right? I mean, that is the goal of working, is to stop working. If you're lucky enough to have a job that you don't consider work, that is even better. So hopefully some of you are in that boat. Do we have any other reasons? No?
To create generational wealth for the kids and sell it so that they can have their own opportunities.
That's right. Good one, right? We're not doing this just for ourselves. We're doing it for our families. This isn't easy work. We don't want to essentially, do this and then have it go away and not essentially capitalize on it, right? There is a whole lot that is riding on this and that we want to happen from doing it. So I agree with that one. Getting some money out of it, right? So to kind of capitalize and to say, okay, this is it. I'm passing this on, and then other people can do other things with it and live their lives. 3 great answers, you guys. So let's see here. We're moving down. We're going to say the steps to selling a business, right? There are obviously a lot of things that you need to do before you sell your business. In some ways, like I said, obviously you got to get ahead of it, but in some ways it's harder to get prepared to sell the business than it is to sell the business. So you want to make sure that what you're selling, other people want. And that's the irony of it, right? If the business is a good business to be sold, it has to be very profitable. It has to have good customers. It has to be able for someone to step in and take over and do, hopefully as well as you were doing in that business. If not, that person doesn't want to buy it. So having that stuff and getting it in a position to be sold is often harder than actually selling it, right? the steps and the effort to get it into that position will be what gives it its value, right? The harder you work at getting it ready to be sold, it might make it easier for you and more profitable for you, but then at that point, that's when it's ready to be sold. So here we go, do you have strong history of profits? If your business is struggling financially, it's going to be hard to sell it, right? No one wants to buy something that's going down the tubes, right? You don't want to be in there trying to rescue it. Attractive industry, we talked about this a little while ago. I mean, I think that, with this COVID and all of us being at home more, I think that there are a lot of people going online these days. Having a business online is been a huge boom during this, and having a brick and mortar has had a harder time. People for a long time aren't going into stores. Now that's starting to change, and people are starting to go in, and things are starting to open up. But I don't think we're back to normal yet. I don't know when we will be. Having a convenient location. I know of a guy who's got a great lease finance business, but it's in Utah. I don't think a lot of people want to move to, a really far off location that's, desolate in the country or whatnot to run a business. Yes, it might be profitable. Yes, it might be easy. Yes, it might make a lot of money. But if it's not, something that a lot of people can see themselves doing, it's going to be a lot harder to sell that business. Let's see here, assets, right? So I think this is a big one. And I think it might be more important than a lot of other things, is that the assets of the business are a huge part of the value of the business. So I think that having the assets in good shape, right? Making sure that the business is set up so that someone's not coming in. It's just like, a turnkey house. If you're going to buy a house and you know that it's going to need a lot of work, well, that's a different buyer than if you're going to buy a house and it's turnkey and you walk in and you get to live in it as is. I think that most people buying businesses, in their heads, they don't want to do a whole lot of work, put a whole lot of money into it. And if they do, they're not going to give you top dollar for that business. So you got to have expectations that kind of meet there. Quality inventory, good supplier relationships. You got to have all of your kind of ducks in a row there. If you don't have the wherewithal or the place to say this is where you go for XYZ, then it's going to make it harder on that person. We talked about customer base. We talked about key man a little bit. Can you transfer your business to another person? So if you have a strong salesman, or if you have a one tenant that is going to be key to your business, keeping them happy and making sure that they're sticking around is going to be a huge part of it. The balance sheet. You're going to have to share your balance sheet if you want to sell your business. You're going to have to kind of put it all out there for somebody. You're going to have to show them where you're making the money, how you're making the money. And if they don't see that, they're not going to be willing to pay as much for it. So if you want to get top dollars, you got to be willing to kind of bare your soul there and say, this is the good, the bad, and the ugly. So to determine your price, we talked about this a second ago, assets and revenue stream, right? Your assets, cash, receivables, inventory, equipment, all the stuff that you might have, but also the building itself. I'm a huge believer in that you might start out not owning your space, but a large part of the value of a lot of businesses is that they own the property where they're located. So essentially, having that as part of your asset is a huge, huge help to work towards retirement or to generating value when you sell the business. Additionally, you could do something where you break off the business, sell the business, but retain the property. You can essentially lease that property to the new business owner. It can give you an additional income stream. And so there's a couple of different things that you can do there. But it's really important to have different, diversification, different avenues of achieving your goals. And I think one of the biggest is owning the property that you're working on. Revenue stream, net profit, right? Not what you're bringing in, not gross, but net. What is it that you actually have the ability to take home? And is that a consistent thing? Is it coming from one key person, or is it coming from 100 different people? What are the different sizes of your clients or your customers? preparing for the sale. So like we were saying, this can be a lot of work, and a big part of the work that you have to do to get ready, but resolving outstanding issues, accounts receivable, debt, lawsuits, environmental hazards, those are big deals that you got to get cleaned up. Accounts receivables, I think that a big part of that is if some businesses have an ongoing issue collecting those account receivables, and that is a running tally, that 30 days behind, 60 days behind, 90 days behind. And if you can't show that those businesses are paying every 30 days or they're every 60 days or what have you, if you can't show that that is being done on a regular basis, it's going to affect your bottom line. It's going to affect what you're able to sell the business for. So getting ahead of those things, getting expectations set for those customers. While yes, you need them as customers, but B, you have to make a living too, and you need them to pay on time or at least close to on time, is a good thing to be working on all the time. I think that preparing projected financial statements is another thing, right? Where do you see the business going? So if the business is not growing, it's shrinking, and staying the same means that you're losing to inflation, right? So it has to be moving in the right direction. And if it's not, that's not gonna be something that someone is really excited about buying. Sell the old inventory. You don't want to be keeping old stuff around. The business has to be looking good physically and on paper. Also, what exactly, so we're gonna go down one more quadrant. What is included in the sale price? Make sure that you're specific about what you're selling and what you're not. I mean, all of you guys got different types of businesses, but if it includes the building, if it doesn't include the building, if it includes the furniture, if it doesn't include the furniture, all those things are really important to get out there so that people know. Where we're looking for prospective buyers. So I know that we've all touched a little bit on death and family and that kind of stuff, but there we go, perfect. Where you're looking for these people that are going to be your new owners is important. I think the easiest place to find a new owner is from a current employee. It's going to be hard to teach someone who's totally new the steps, what it takes to run the business. But if you have to, you have to. So I think the easiest place is a current employee. Customers, another good spot. If you have somebody who really cares about your business and has been a good customer, supports the idea, is behind the ideas, then that's going to be an easier person to. It's going to be easier for that person to run the business. But I also like the idea of competitors, right? If you have competition that's close by, if you know somebody that you keep bumping into, that might be a good person to talk to about taking the business off your hands. They might have a better understanding of what your business is capable of doing, maybe even if it's fallen behind a little bit, or if it's suffering a little bit of neglect. Someone who knows you and has been, watching the business for a while now, would be able to realize that value and might give you a little bit more. It says here, advertise online, trade associations, email, inform potential buyers. There's also even people out there that sell businesses. So definitely, finding somebody that knows your niche and knows the business that you're trying to sell is going to definitely help you to get the best value for it you can. Negotiating the deal, it is not an easy thing to do. It's in some ways harder than any other negotiation, home, marriage, what have you. But the person who's buying it has to be qualified. They have to have an idea of what they're doing. They have to, kind of have some experience. They have to have the financial wherewithal, obviously, but they have to be good stewards of what you've built, right? Again, you have these customers. A lot of them, I'm sure, have been customers for a while, clients. You want them taken care of. They've taken care of you. You have to take care of them as well. You can't just leave them high and dry and give it to someone who doesn't know what they're doing, and/or worst case scenario, someone who's not going to help them, and someone who's going to, maybe hurt them in some ways. So how are they going to pay for this? Obviously a lump sum is nice and easy. Installments, I think, are a more common way of doing it. You can work in the business for a while. You can essentially help them to get their feet on the ground and get a little bit more comfortable. collecting your normal salary or income or what have you, but then start stepping away and cutting that back further and further as they become more and more of the person who's running the business. Non-compete agreement is important. You don't want to sell it to someone and then have them turn around, and then you turn around and essentially start a business that competes with them. That's not going to work for the old business at all. Like management assistance, we just kind of touched on that. Sales agreement preparation. So obviously you need to get attorneys involved, attorneys, accountants. You're going to have to be, doing a lot of things that are going to be written down above board. Everyone's on the same page. So basically getting a sales agreement in place that lists everything out is going to be a huge part of it. I think that having a down payment is also a big part of this, because there needs to be skin in the game from day one. If you're selling this business to someone and they're only going to pay you installments, there is a lot of things that can go wrong there. So having them come up to the table with a little bit of cash is always a good idea. Collateral is a tricky one. The person buying the business, it might be hard for them to have the collateral, right? The business might be the collateral, itself, but I think that you have to have some, either you're willing to take the business back and not worried about what they can do to it in the meantime, but having something other than the business as collateral is I think, a good idea. If you can get that, I would definitely suggest it. So we're gonna have another little conversation here. What is some of the challenges of selling your business? Wonder if you can go down one more, please. If we can get some of your opinions, what do you guys think the hardest part of selling your business is gonna be?
Just simply letting it go, because most people believe that it's their baby.
That's right. It is a baby, right? I understand. Yeah. You don't want to let go of your baby. Good one. Not to mention you need the income, right? You might want to sell it and do something else, but you might not be able to start that other thing until you've sold it, right? And you need that income to kind of keep your life going and keep moving things around. Do we have any other ideas?
Let's see. Miss Garley? Gigi, I'm sorry. She might not be in a position where she can speak. What about you, Miss Shelley? Okay.
All right. We touched on a little bit of it already, right? If the business is not saleable, right? That's the biggest reason that you can't sell the business, right? You might be able to generate a nice income from your business, but just because you can do it, you might be the only person that can do that. Or it just might be a difficult thing for the average person, but maybe you're willing to do it. There are reasons that, having, like I said, diversification, different plans to achieve your goals is a good idea. And it might be that selling this business doesn't happen, right? Maybe you can run the business, maybe you can get good income from it, but when it comes time to sell it, there's no one out there that's going to do it. So like I mentioned earlier, owning the real estate, and what we're going to get into here in a second, are some of the reasons that you want to have different avenues to achieve the same goal. I've talked to a lot of business owners over my life, and I think that the vast majority of them prefer putting their money back into their business. While I think that's a good idea, it can also backfire, right? And you might be pumping money back in, and it might be helping you, and it might be doing well, but there might come a day where it's not. And then you've already put all this money back into it, and you're not going to get the money back out. And that can be a raw deal for the person who is working so hard. So some of the reasons they got listed here: too small, insufficient assets, profitability, no interest, decline, not promising, specialized area we talked about.
Hey, Peter, what about seasonality? Trying to sell it in the wrong
It's
season.
another one. Yeah. Maybe you can only do your business in the, you got a snowplow business or a grass cutting business, and you can only do it one time during the year. That, having a job in the summer is great for a teacher, but the snowplow business isn't going to work for them. That was a great point. So I think that there are going to be a bunch of different reasons why you might not be able to sell the business, or it might make it harder just to find a buyer. So I think that, some of the other stuff in here, your founding documents, and I don't know how the vast majority of you are set up, but sole proprietors are the vast majority of businesses out there. I know we mentioned at the beginning disagreements between partners, but having a sole proprietor helps you because you're the boss, right? Having partners means that you are working together with other people, and that makes everything more complicated. But it also might be the only reason you have a business to begin with. So it might be something that you just have to deal with. But when it's time to sell that business, you're going to have to unwind those documents. You're going to have to follow those documents and figure out, what's going to be good for everyone, right? Because the other partners are just as much involved as you are. And maybe it is that they buy you out, which is always a nice thing, but maybe they don't have the wherewithal to do that. And maybe it's an all or nothing situation. So following your instructions in your founding documents, that's going to be a big part of it. Hopefully, more than not, you guys are sole proprietors. Figuring out the right paperwork. Again, this is why you have the attorney and accountants are going to be involved. You're definitely going to have to, LLC paperwork's not the most difficult, but you're going to have to file the correct paperwork with the state, with the government to make sure that, it's closed down in the right way. Selling assets, right? Getting rid of your inventory, the real estate, that's ideal. Again, you want to make sure that you're kind of doing that. But permits, licenses, lease agreements, these are all important things. If you can move down a little bit, that would be great, Quandra. I'm sorry. I don't think everybody can. Yep, there we go. So tax laws, right? You have to make sure that you pay your taxes all the time. You have to make sure that your taxes are paid when the business is over. You have to make sure that that's all done ahead of time. You have to pay it, and then when you close it, you have to keep those records. You have to hold on to that stuff. You got to make sure that you have it in case anything comes up in the future. Resolve any issues with customers, creditors, suppliers. You gotta get everything kind of put together there. So the next page here, Quandra, if you will, planning succession. So finding the person to step in, right? I think this is our next time to ask some questions. What benefits do you see in selecting a successor? What would happen if you were able to continue running your business and did not have a successor? So what do you guys think? What's the big idea here? How does this help you finding a successor? Anyone?
Can you ask the question again?
Yeah, what is the big benefit to find a successor for each of you? What will it allow you to do? What's the end game here?
Well, your business will continue to flourish and continue.
Yep, continue on, right? Whether it's with you or not, right?
Correct.
Maybe you're still drawing an income out of it. Maybe you're not, but at least you're passing on something that your customers are going to be taken care of. The people that have taken care of you are going to essentially get the help that they need. So that's a good one. I agree. Anyone else? No? Okay. So let's go down one more slide, if you will, Quandra. So finding a successor isn't easy. We touched on it a little bit. Family is somewhere where a lot of people look, but family is also where a lot of businesses get in trouble. You want to give your family, what you've worked hard for, but there are lots of different ways to do it. And sometimes making them the new owner can upset a lot of other people if there are other employees, right? So if someone essentially just steps in and says, I'm the new boss around here, it might be a difficult thing for people to swallow. It might be a hard thing for people to get used to. So it needs to be something that you're doing from the very beginning, or at least from, for a long time, is setting the expectations, talking about this stuff. I think that identifying employees, like we talked about earlier, and then grooming them to be the next owner is a good thing to do, right? I mean, the hard part is the hardest thing, and I don't know how many employees you guys have, but for me and what I found, the hardest thing about any business is actually the employees, right? Managing the personalities, dealing with what everybody is trying to accomplish in their own lives is oftentimes the hardest part of running a business. The nuts and bolts of the business, you've got that figured out. The hard part is getting other people to help you see those nuts and bolts and accomplish those nuts and bolts. And then to find someone who cares as much about it as you do is a very difficult thing. So I think that starting with a good employee is always going to be your best bet. And in those types of situations come because people are being trained. They're the ones who are being groomed for the job, and essentially, getting ready ahead of time. Tax exposure. Yep. So when you're passing a business on to somebody, there's going to be taxes because of it. Now, it depends on what the value of the business is, right? The different values create different taxes, but at the very least, if you give someone a business, there's income tax involved, and if they start taking an income from that business, they're going to owe tax on that. We talked earlier about generational wealth. A lot of what is going to happen is going to be in generational wealth is going to be about estate planning. There are certain limits and certain taxes that you owe when you pass on large assets to people. So getting that figured out ahead of time is going to be a huge part of the equation. Having maybe an employee manage and run the business, but a family member essentially own it, is something that you got to kind of figure out and work with, everybody to accomplish. And that's not an easy thing to do at all, especially if you want to bring in a family member and have them run the business and be the new boss. I think that the next one is something that I've been talking about or referring to a little bit, planning for retirement, right? So now we're at a point where we've kind of covered the basics of, how we kind of push the business out, what we do. You gotta close out the documents. You gotta make sure all the contracts are honored, and you gotta kind of clean everything up on the business side. But I mentioned earlier, owning real estate is a good thing for everyone to do. So is retirement planning. While you're in the business, not being the guy who says, I'm plowing all of my money back into this business, but instead to focus on retirement for yourself as well as your employees is a huge help. It's another avenue to create wealth for yourself. Yes, the business, hopefully you can sell it for a lot of money, but a lot of times the real estate and the retirement plan you've been building or the savings you've been saving while you've been running the business are going to be what gets you to retirement. It's not going to be just selling the business. It's going to be all of those things combined. And if you're missing one, it's like that three-legged stool analogy. If you don't have the building or you don't have retirement savings, it might not be enough for you to retire, and it might make your job harder. Whereas from the beginning, if you're starting out and you're thinking about these things, you can start to plan for them and start to get ahead of them and really help yourself in the end. So here we go with talking about planning for retirement, right? Retirement plan benefits. So here are some really big reasons for setting up a retirement plan. Your contributions are tax deductible. That is a huge, huge thing, right? So helping your employees with their retirement is going to be a reason for them to stick around. And so if you're offering these benefits, you can deduct that on your taxes, but you can also create an employee who has a lot of goodwill and is willing to stick around, and you can then groom that person. So it kind of goes hand in hand with what we were talking about earlier, is that by doing these three things, you can not only help yourself by preparing in case you can't sell the business for what you think you can, but also you could maybe even find someone that can then take it over and send you back installments, or take it over and give you more free time to spend with your family. So there are a lot of reasons that you want to start a retirement plan to help you accomplish your goals. Let's see what else we got here. Assets in the plan grow tax-free. So, flexible plan options are available. Retirement plan can attract and retain employees. We just touched on that. Let's go down to the next page here, Quandra. It's going to reduce your current taxable income. That's a huge, huge thing, right? If you can put money away in a retirement account instead of paying taxes on it, it's a win-win. Once it's in the account, you're not getting taxed on it. Any capital gains, any income, anything that comes off of it, you don't have to pay taxes on it. They can make contributions through payroll. You can essentially start small and really, because of compounding, save a lot of money. So not only can it help you, but it can really, really help your employees. You can carry them from one employer to the other. You can take them out whenever you want. You can always get access to it. There might be some penalties for that, but you can get the money out of these plans if you need to. And then retirement, like we've all talked about. So we're going to go over a couple of different options here. What different? I think that you went a little bit.
Oh, sorry.
Yep. We're going to talk about some of the different options here. There are many more. So we're going to go over a few of them, but there are a lot. And I would suggest that all of you talk to a financial advisor. We do a lot of retirement plans for people. We have a group that specializes in 401ks for large companies. In general, a financial advisor can help a smaller business out. But these are some of the most common plans for some small businesses. The SEP, the Simplified Employee Plan. The catch here, if you can see, you can contribute up to 25% of employees' pay. Owners can't contribute the full 25%. There's actually a formula that they have to work with to contribute, but it's still a decent amount of money that you can get in there. Simple plans, if you have less than 100, that's a good plan as well. And then just a regular IRA, an individual retirement account. You can open them at banks, you can open them online, you can do a lot, and your payroll can help you get that money to those accounts. The next one is the 401ks, defined contribution plans. They let you decide how much to put in. They are, again, tax deferred, so the money going in isn't taxed. The earnings aren't taxed on it, but it's a good thing to have to kind of keep your money growing and do it in the most efficient manner possible. So if we scroll down to the next one here, Sandra. So the 3 key points to remember. Transitions include selling a business, closing a business, retiring all or part of the life cycle of business, and you should prepare for them. The last part is the most important. The sooner you start doing this stuff, the easier it is. If you start from day one thinking that you have to do this stuff, it's going to help you. You don't have to do it right then, but if you're thinking about it and trying to prepare for it and get ready for it, that is going to be a great thing, and it's going to help you tremendously. Retirement, the last point there, having the retirement plan, think of it as a backup plan, right? Owning the real estate, think of it as a backup plan. These are things that you need to do just in case. So I would strongly encourage all of you to own your own real estate. I would strongly encourage all of you to have a retirement plan, and having that, will help you make sure that the business does help you retire and does help you accomplish those goals. So with that, we kind of learned a lot here today, or at least talked about a lot. Reasons for selling the business, steps for selling the business, steps for succession planning, the steps and the benefits for creating a retirement plan. Do you guys have any questions, anything that you all are wondering about?
Is it a good idea to have first rights of refusal inside the business plan, just in case, I guess, a partner doesn't have a will?
I'm sorry, excuse me, say that one more time? Sorry.
First rights of refusal, is that key to have it in the business plan?
Yeah, so no doubt, you don't want to sell the business to somebody who you don't think is the right person. It gets back to what we were saying about treating your customers right. They took care of you, so it's right that you should take care of them as well. So definitely, I think first right of refusal is an important thing to have there. Anyone else have any questions about anything, or something that you learned, or I don't know, anything?
On your list of investments, what about a self-directed IRA?
So yeah, that was one of the things, right? You can have just a regular IRA account, right? And you can even have the payroll essentially deposited into that. Now, the only downside to an IRA is that the contribution limits are smaller. You can contribute more money to those other items listed, right? The SEP, the Simple, the 401k. So meaning that you can put more of your money from taxable to not taxable, and at the same time, save more for retirement, right? So it's kind of, the IRA is the basic. That's step one, right? If you're going to start this, you always have that as option number one. But when you get to a point where you're bringing in enough cash that you can easily exceed that 6,500 or whatever the limit might be for you, because there are limits on how much you can put into these retirement accounts. Right now you can put in 19,500 into a 401k. You can't put in anywhere close to that in an IRA. So having a different account, and having an account that's going to essentially meet your ability to generate income is a good thing, because you're not getting taxed on it from a business, and it's going to help you retire faster. That was a good one. Good question. Anybody else?
What about having life insurance on the owners if you have partners?
Yep, 100%. Great idea. Key man insurance is a lot of time what it's called. So having insurance on the owners, right? Especially if the owner is the one who's running the business day to day, the nuts and the bolts, doing everything. That is important, because like we said, you die and there's no one there to explain to the next guy how things worked. It's going to be hard to sell that business. So having insurance is a huge thing. I don't believe insurance is the end all of everything, right? You should have insurance for catastrophic risk, which basically just means that, if I don't have insurance for this and X happens, there's no going back. In the death of the owner, when he's the one doing it all, that is catastrophic. That's the end of the game. And your heirs might be liquidating the assets to get as much value as they can, and that can be a really bad deal. That's a good question.
So just to follow up on that, so say for instance you have 3 partners. Can each partner get life insurance on each other, or does the business get life insurance on those other, or on all 3 of those partners?
Exactly. So it can be either or, right? So most of the time the business is going to buy the insurance for the 3 partners, if you will, because the 3 partners are probably equal or somewhat equal. So that again is going to be a business cost. But that is essentially something that is, if one of them dies, or the wife of the one of the 3, right, they want to have some kind of inheritance, or rather some kind of value received from this business. That insurance might be the only way that you can do that. So having that available, either that, or sometimes in worst case scenarios you might have to sell the business. The 2 other guys in your example might not want to sell, but they might have no choice because they liked, XYZ's spouse, and they don't want her to be without this money, and or they don't want to pay her the income he was getting because he's not there to do the work. So having that ahead of time is a huge, huge benefit. Key man insurance, right? And it can be buy sell, another term you guys might have heard, but essentially where you're arranging ahead of time that the 2 other partners are going to buy what the deceased guy had. So he's selling, the other guys are buying it, and you can structure insurance deals to pick up the cost of that. It means that you're paying on an ongoing basis, but in the event that something happens, everything the transition of power happens very smoothly, or at least as smooth as it can without a key person. Another good question. Anyone else? All right, you guys. Well, I really want to thank you for coming today. I had a great time. There is an